बहरहाल अब हम रुक कर सकते हैं HDFC लाइफ और मैक्स लाइफ के मर्जर पर इस वक्त एक प्रेस कॉन्फ्रेंस हो रही है.
And they can be serviced across any touch point as far as the requirements are concerned. It will obviously lead to higher cross-sell opportunities. We believe that both the companies over a period of time have developed immense strengths in their distribution channels. For example, Max Life is very well known for what they do in their agency channel. Similarly, they have created some great practices in their bank insurance channel with Axis Bank. We have similar experience with, for example, HDFC Bank and what we have done in the digital channel. We'll be taking some of these best practices to all the channels of the merged entity. There will also be savings due to value engineering. There will be improved employee value proposition. One of the primary reasons for the merger is to, as I said, to make something which is more than the sum of the parts. So there will be better opportunities for employees across the two organizations and the geographies. It will lead to access to a larger talent pool. We believe that at the end of this merger, the merged entity will perhaps have the best talent pool across the insurance sector. And that is saying a lot. We should and we intend to become employer of choice to attract and retain talent. These are some of the numbers. On a financial year 16 and Q1 financial year 17 basis, total premiums of 25,529 crores, AUM 110,000 crores, solvency margin of the merged entity will be much higher than what say HDFC Life has today, 252%. EV will be 15,850 crores, which will be the highest in the private sector, and overall post-overrun margins will be 19.2. If you look across some of these matrices, you will realize that product mix is complementary. Our new business margins are very similar. If you look at the persistency of the two entities, it is also very, very similar. So it was almost God created these two entities to come together, and we are coming together today. The numbers for the Q1 financial 17 are also very similar. The performance trend of both the companies continue at the same pace as before. These are some of the other matrices. Number of employees will go to 23,620. Number of branches will go to 601. Customers will be about 7 million customers on the individual side. Agents will be 134,000 and we'll have 8 key bank insurance partners. We expect, as we move forward, we are announcing the transaction today. We have executed some of the documents today. We expect to complete the execution of all the documents within 7 days of announcement. We are going to apply to CCI by September 7, 2016, which is a requirement, and we expect an approval. We have said here 4 to 5 months. We expect it to come in a little bit earlier. IDA notice of intent and application for in-principle approval is expected to be filed within the next 30 to 45 days. Again, the in-principle approval is expected in 3 to 4 months. SEBI, we will be applying within 2 to 3 weeks. Both Max India and Max FS will be applying to SEBI. In-principle approval is expected in the next 30 days. And obviously, after receiving all these approvals, we intend to approach the High Court and then apply for their permission to actually, follow through on the scheme, composite scheme of arrangement. I just want to make one or two important here. I want to reiterate it. Our ambition is to create something which is bigger than the sum of the parts. We believe very strongly that the insurance sector is entering a phase of growth which has perhaps not been seen in the past, and we believe that the runway for growth is quite long. The merged entity will have the wherewithal to make huge amount of investments as we move forward in technology, in digitization, and it is our intention to emerge as a cutting-edge digital insurer in the future, apart from doing all the other things. We also believe the merger will provide greater opportunities to our customers, because we'll be giving them a wider choice of products and we'll give them a much more service touch points than before. It will provide a better opportunity for all the employees because of the size and the scale which this merged entity will have and the growth ambitions we have. We'll also strengthen our value proposition for our distributors, and so they will also gain through this merger as we move forward. And finally, since a lot of shareholders are sitting on the dais, we believe we will also be providing a higher value to our shareholders, which the standalone entities would not have been able to achieve. So a very quick snapshot of what this merger entails. Let me now request Mr. Deepak Parekh to just give a few remarks, and after that we'll request Mr. Anujeet Singh to do the same, and then we'll open up for questions. Mr. Parekh.
There is very little to say after Amitabh's presentation, and he's given you all the numbers. But all I'd like to say today is that the board of directors of HDFC Standard Life, Max Financial Services and Max Life and Max India Limited at their respective board meetings held today approved signing of the definitive agreements. So we have signed number of documents, and I also wanted to thank the management teams, Rahul, Mohit, Rajesh, Amitabh, Vibha, and their respective teams who have been working tirelessly in the last 6 weeks to see this day happen today, with the total support and sleepless nights from lawyers. And we had many lawyers and bankers, Upwood, Srini, and then many bankers. So without their help and support, I don't think we would be here today. Even today it was touch and go. Till yesterday we didn't know whether we would be having all the documents ready. But the lawyers finally came through. I also wanted to say that Mr. Analjit Singh will continue to be a supportive shareholder of the merged entity along with the other shareholders of Max Life. And we all will work towards the objective of making the merged company a better company, a bigger company, a more successful company. Analjit and his team has created a strong and robust franchise following the strategy of consistent and responsible growth to create value for both policyholders and shareholders across the years. Analjit doesn't miss a moment to remind me that for 16 years he's at it at this company, day in and day out with his colleagues. And he's built huge amount of value in this company. And I agree with him, he has built value, and it's an excellent company that he has built. We really appreciate his efforts and the domain expertise. As Amitabh has said, we will proceed with the regulatory filings, and I expect the merger to close within 12 months. The merger will make our consolidated market share of 10.8%. And as Amitabh has said, that the AUM will be 1,10,000 crores and EV will be about 15,850 crores. We have 8 bank assurance partners, including 3 large private sector banks. The last few months have been exciting for the Indian economy. Indian financial services and insurance in particular continues to decouple from the rest of the world. And we are seeing attractive growth rates in India. The monsoon fears have abated. Foreign inflows have started and continue to be robust. A transformational GST bill has been passed, and the Reserve Bank has recently announced licenses on track for further expanding the financial inclusion program of the government. So the outlook of the financial sector, financial services industry, I think is very good and rosy. We view this merger as a long-term value creation for shareholders of HDFC Life. Insurance is a highly competitive industry. And even after a decade and a half, now we started in the year 2000, so 15 years later, LIC continues to be a single dominant player. LIC's market share today is over 50%. So the consolidation in the private sector will enable creation of large insurance companies, which is inevitable, which will drive economies of scale. It will improve servicing standards, and you need a strong balance sheet to be in life insurance business. Both the companies have proven ability to navigate through turbulent times. And the 15 years that we both have been in existence, we've done reasonably well. We've had losses for a decade or more. We didn't pay dividends for more than 10 years. And it was a tough business to start and keep on putting more money every year, every second year. So we are seeing the results now. And consolidation in this industry, in effect, is already happening. If you look at the top 4 private sector companies today, 4 private sector life insurance companies today constitute 65% of the market share, of the private sector market share. 4 companies constitute 65%, and the other 19 companies put together contribute 35%. we are, Max and HDFC are amongst the most reputed names in this industry, and we are very happy, and today is a joyous occasion for us to see this happen. And all I can say is that we look forward for a great association with the Max Group and Mr. Analjit Singh in particular. We are excited at this opportunity. We will work hard to see it work, and it's a great moment of joy, and we look forward for support from everyone. Thank you.
So Deepak bhai.
इंश्योरेंस बिजनेस एचडीएफसी लाइफ में ट्रांसफर होगा। आपको बता दें, मर्जर के बाद एचडीएफसी लाइफ एनएसई बीएसई पर लिस्ट भी हो गया। इसके लिए एक प्रेस कॉन्फ्रेंस भी की जा रही है, और डील के बाद एचडीएफसी लाइफ की जो हिस्सेदारी है वो 69% हो जाएगी।
So firstly, very good evening and greetings to all of you from the Max Group, and I thank many of my directors who stood by me to make themselves available this evening. To Deepak bhai, friends from HDFC, ladies and gentlemen, when I did do this lamba writing, the first emotion or the first thought that crossed my mind is what I want to share now. And I want to say that to begin with, I must recognize the contribution of a very special person in this whole, the life of our life insurance business, Tony Singh, the founder CEO of our life insurance business starting way back in 1999. And without the foundation and successful startup that Tony led, we would not be sitting here today. So thank you, Tony, and I understand he's going to join us for dinner this evening. So today is not only special from this venture's point of view, but is additionally reminiscent of August 1998, Deepak bhai, because it was also in August then. And for those of you who are somewhat above the age of 30 or so, that you will remember that a similar event happened in our lives. And of course, I'm referring to Max Touch and Max Hutchison and so on and so forth, right here in Bombay. And of course, it's fair to say that the media and the media jocks and the journos were much more relaxed then and nowhere as sophisticated as you see in their preparedness and their equipment and so on and so forth. But that's nice. That's a part of growth. So very simply, coming to the point, why is this merger happening? I think that is the most pertinent question on this event. And the answers lie in the following few lines. We see structural changes in the life insurance industry. For example, distribution and banker. That is not the way we started out. It was agency-led to begin with. The government's model was to build an employment-oriented led life insurance business, but that changed after 10 years. So we see the distribution arrangement through banker changing the landscape of this sector. We see shorter horizon products being more palatable with future markets, i.e. ULIPs, investments and so on. And we see, therefore, that margins will come under pressure if expense management and optimization, etc., is not brought to the fore. So hopefully this merger will not only provide all the things that Amitabh and Deepak bhai have talked about, but even things like optimizing expenses will improve the expense ratio and therefore the health of the merged entity. We built a fantastic business focused on agency, protection and savings, and with outstanding governance. And then came bancassurance. And I can clearly see from my experience with Access and the power that HDFC Bank brings to the table that the future of this merged entity will bring much more for all the stakeholders than standalone for Max Life or HDFC Life. So we therefore took a call. We've always believed in the concept of what is a natural owner of a business. And a natural owner of a business is that owner who brings the capital, brings the passion, brings the infrastructure, and brings all the pillars to future growth of the business. And we recognize that HDFC Life and HDFC at large, obviously including HDFC Bank, to be a much stronger foundation for the next 20-25 years of this merged entity than just Max Life alone. So this will take us, as you've already heard from Amitabh, that this was perhaps destined to happen, will make us the single largest private life insurer in the country, and that also only after LIC. So I won't take more of, because a lot of the things that Amitabh has talked about, there's no point repeating them, but it is obviously opportune that I must first and foremost here, in my thanks, want to talk about my team and specifically acknowledge the management team, Rajesh Sood and his team at Max Life, who have transformed the company into one of India's most admired, profitable and well-run life insurance companies. They actually doubled the market share over the last 5 years, progress, quality and service excellence, which has been the foundation on which we have built Max Life and the other Max businesses, and emerged as a strong and highly reputed enterprise with a track record of flawless execution in this time. I am mindful that we did not have a consumer service or a consumer product background. I am mindful that Max's profile in its previous life was very different. It was not a financial services company. It was not a bank, and so on and so forth. Therefore, to have come in a way from that background and to have built, sitting at number 3 in amongst 23, 24 is actually a great, great achievement. I also want to thank my partners, including New York Life, who did not leave this venture because of Max or of India, but actually had a change in strategy and winding up their entire international footprint in 2008, 2009. You would have thought that's the worst year to do that. But the fact is that in the market which has and had the highest penetration, they have grown double digits even since then. So I want to thank them. I want to also thank MSI, Mitsui Sumitomo, for their support and faith in us, and several key investors who've held our hand through this journey: Warburg Pincus, Goldman Sachs, KKR, and so on. Equally, our advisors, AZB, Ernst & Young, PricewaterhouseCoopers, Ambit, and so on and so forth. And finally, to recognize and to thank, there is a character in this room today wearing a yellow tie. His name is Srini. Srini, put your hand up. There you are. And I have to say, and Deepak Bhai, allow me to say on both our behalves, that in a sense, this is his brainchild. And I'm sure that when he first walked into Deepak Bhai's office and told him, Deepak Bhai probably showed him both doors of his office. I have only one door and never even came to that stage because he walked into Mohit's door. But the fact is that he brought and made good sense to both the partners who are coming to create this merger. And here you are, Srini. I think we have done the right thing for the right reasons, and going forward, this will hold us in good stead. So thank you very much. Yeah. And finally, Mr. Deepak Parekh, who's been a supporter, and Renu will remember this over the last 15, 20 years of the Max Group, in so many situations as we were building out as a very small company, including telecom days. And I've never had to wait beyond 5 working days to get a positive call back from HDFC. So, Deepak Bhai, I will never forget that. Amitabh, thank you for shepherding this merger, and I count on you, your team, and obviously Deepak Bhai and Keki and Renu for the seriousness and fairness in working with my team to make this merged entity a very long-lasting and powerful, not only the largest private life insurance company, but I will not at least dream that it will be the largest life insurance company. On that note, thank you very much.